again, I'm still looking for a pullback maybe to about 65,000 here, and then potentially that next leg up. I think it's just amazing. And this is, again, human psychology, right? They push it above, you get max people long, it's already extended, and then they love to flush it out, or human psychology just runs out of buyers there, and people start to take profits, and it drives it back down.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, let's discuss these topics and more.
Again, today I'll be looking with the Apex Live day trading room to potentially trade the 41.15 level. Sherwin-Williams getting hammered this morning down. I think it's down about 7 or 8% here. This stock, again, was pretty top heavy. Going into it, you did see a little institutional dumping here, but for the most part, again, it is trading down pretty sharply. The one thing I'm watching here as well is this trend line. All right, so this is going to be a key level to watch right around 320 to 315. If it gets into there, that should be a day tradable level. There's also a gap fill at about 323. So right in this vicinity, there may be a tradable level. If we look pre-market, it only got as low as 347. So it would have to fall a lot more during market hours to come into a high probability day tradable opportunity. Now, notice how I'm not talking about swing trades, right? So I'm not saying, oh, I love this as a swing trade. You'll notice that when you look at charts and they've rallied like GE has, right, from $30-something to $200. Sherwin-Williams here was trading at 230. It got up to almost 400 here in just basically a year and a half. Those are charts that I won't go near as a swing trade unless I have 3, 4, or 5 factors on the long side and they've corrected significantly. And when I say significantly, I'm not thinking like 10% off their all-time highs. Not even close. I mean, these type of plays, if we ever get towards that recession that I still think is coming, then I think, again, you'll see 30, 40, 50% moves where you get into major longer-term trend lines that then can be used as swing trading opportunities. All right. Flipping over to NVIDIA, what a move on NVIDIA. Remember, we talked about what this could likely do. I still have that, and let me go over to the big board here so we can talk a little bit about NVIDIA. Strong move yesterday, single-handedly helped the market stay positive for the NASDAQ alone, right, because it's now a $3.5 trillion company. Here was your previous pivot high. There's your breakout there. It's unconfirmed, granted, but I still am seeing in the charts the possibility that it goes to about $150 a share before it sees that next dump. That would equate to a move on Bitcoin that, again, saw that move up following the previous high in 2021, where you got this classic M pattern top, and I love that opportunity there. And some people say, well, what does NVIDIA have to do with Bitcoin? It doesn't matter. It doesn't matter. When you really start to understand what you're trading, you're really not trading Bitcoin. You're not trading GE. You're not trading any of these. What you're trading is human emotion. Everything is all about what's up here in the market, right? So it's what are people feeling? What are they thinking? Are they bullish? Are they bearish? Are they greedy? Are they fearful? What is the human syndrome essentially doing which causes things to go up and down? A lot of people will say, well, isn't it the news? Well, no. The news can create reactions within people, but in general, if you look back historically, you'll see the same patterns. That's why technical analysis works so well, because human nature doesn't change. Greed is greed and fear is fear. You go back to ancient Egypt, you go back to ancient Rome, you go back to any of these civilizations, they didn't necessarily have the stock market as it is today, but they still traded goods, right? It was the same thing, the tulip mania, right, in the I think it was the 15 or the 1600s. Same things go on. Same chart patterns form. And so you can then start to equate whether it's a commodity, a crypto, or a stock, or a market to the same pattern formations. Really, really important to understand. That was a very freeing thing for me once I started to realize that it has less to do with what it is. Like, it doesn't matter that it's an iPhone. It matters the reaction that that product and that stock is creating in people, causing greed. Then you get max greed. What happens with max greed? You get the pullback. Max fear, you get the bounce, right? All of that really, really important.
Bitcoin dropped to $67,000 following a stock market sell-off. but BTC derivatives showed no signs of panic, indicating steady market sentiment. On October 21, Bitcoin's price dropped to $67,000 due to concerns over economic contagion from traditional markets. Despite the price drop, the Bitcoin futures premium stayed above 9%, reflecting continued bullish sentiment among investors. Rising inflation and bond yields, driven by U.S. government fiscal policies, weighed on the market. Bitcoin's 40-day correlation with the S&P 500 remains above 80%, signaling a strong connection between Bitcoin and traditional assets. Despite Bitcoin's recent dip, the resilience of the BTC derivatives market suggests traders are not anticipating further significant declines.
Earlier this morning, it was down a little bit. It's still down a little bit here. Again, I'm still looking for a pullback maybe to about 65,000 here and then potentially that next leg up. I think they just did, it's just amazing. And this is, again, human psychology, right? They push it above, you get max people long, it's already extended, and then they love to flush it out, or human psychology just runs out of buyers there. And people start to take profits, and it drives it back down. But again, I still think there's a decent chance of a bigger breakout here. They just want to flush out those weak hands. Gold today, after a topping tail yesterday, is trying to retest this level. So you can see here's your topping tail on gold. Beautiful push up today. Watch the high of the topping tail. So remember, in fact, let me go over to the big board to discuss this. This is a good lesson. So when we're looking at this chart here, all right, there's key metrics. It doesn't matter what I want, what I feel, what I feel, my gut tells me, anything. What matters is probability. History has shown through thousands, if not hundreds, if not millions of situations where topping tails have formed that you can tell when a topping tail fails. So when this candle forms, it means probability favors the downside. As long as this candle or any subsequent candle does not close above the high of the topping tail, then this is the dominant candle formation, which means probability favors the downside, right? Now, if at any point we close, like let's say today closes above the topping tail high, it has nothing to do with, oh, Gareth's wrong. It just means probabilities have switched. So I go with whatever probabilities are telling me. Right now it's telling me it's still below, hasn't closed today above. It's telling me it favors a move like this. If we close above the topping tail, now all of a sudden probability flips back to favoring the upside. All right, very simple. And this is the beauty of it, folks. You see me doing this stuff. There's nothing, I'm not like doing, x squared plus y equals, I don't know, whatever. I'm not doing quadratic equations or calculus here. This is very simple. This is such a simple principle that each and every one of us can learn it. If it was too complicated, I wouldn't learn it, frankly. It's all about keeping it simple. What is the probability based on that candle formation? Downside right now, how do I know if it fails? If it does this, done and done. Simple as can be. And I think that's really the key, right? So these are things that institutions love to make out to be like super complex and like all these crazy things, and these analysts are coming up with these price targets. Like, literally an analyst is like, okay, what's the PE ratio of the market? All right, well, I think the economy can grow by this, therefore, they're not using crazy stuff. It's simple stuff, but they want to make it seem crazy because then it's like, oh, these are the institutions. Watch out. They've got amazing stuff. I'm showing you stuff that they're using. They just don't necessarily want you to know about. Remember that, guys. All right.
Tesla CEO Elon Musk addressed XRP and cryptocurrency during a town hall, emphasizing crypto's role in promoting individual freedom despite regulatory pressures. His comments resonated with XRP supporters. During a Pittsburgh town hall, Musk discussed cryptocurrency's significance, clarifying that his remarks were not a direct endorsement of XRP, but acknowledged crypto's importance. Musk highlighted how cryptocurrency strengthens individual freedom by offering an alternative to centralized control. XRP remains embroiled in a legal dispute with the SEC, which claims Ripple's XRP sales violated securities laws. Ripple insists XRP is a cryptocurrency. Ripple's CEO responded to Musk's remarks, underlining that voters care about crypto policies that foster innovation and job creation. Musk's remarks reflect his ongoing interest in cryptocurrency, including Bitcoin and Dogecoin, as crypto continues to shape financial systems. Michael Saylor's recent suggestion that Bitcoin holders should trust too-big-to-fail banks over self-custody sparked backlash from the Bitcoin community, accusing him of undermining Bitcoin's decentralized ethos. In a recent interview, Saylor suggested that Bitcoin holders trust big banks for custodianship, a shift from his previous support for self-custody. Saylor dismissed fears of Bitcoin seizure by the government, calling those concerned paranoid crypto-anarchists. Prominent Bitcoiners criticized Saylor, accusing him of diluting Bitcoin's decentralized principles and shifting it toward institutional control. Supporters argue that Saylor's comments were meant for institutional investors who may not find self-custody feasible. As Bitcoin's largest corporate holder, Saylor's stance has reignited debates about the balance between decentralization and institutional adoption. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.